Hello, and welcome back for another video. Today, we're going to be talking about the exciting world of insurance. So, what is insurance? Insurance is something companies will sell to you in a monthly bill that they'll call a premium, and they're going to collect this premium from all their customers and they're going to pool it together. And in the instance of a certain event happening to one of their customers, they're going to take a little bit of money out of the pool and pay it to that person. And what insurance is meant to do is put that person in a similar situation that they were in before that event happened. So, why would you want to buy something like this? Well, for one, it could be a legal obligation for you to get it. And that is the case for car insurance. And if you own a business, it would also be workman's compensation in case one of your workers get injured. You still have to pay for their wages. But it could still be very beneficial to get insurance if it's not required as a risk management technique. But we're going to get more onto that later. So some types of insurance that you might run across are health insurance, which they would pay to you in the instance of you getting injured, life insurance, which they would pay to your beneficiaries in the instance of your death, automobile, which would be in the instance of a car crash. Renters could be a whole bunch of things from theft to flooding. There's malpractice insurance, which is more for doctors or lawyers. And an up and coming insurance is pet insurance because people are starting to want to insure their health of their pet. So when would you want to get insurance? So just as a general rule of thumb, earlier is better than later. And why is that? Well, the earlier you apply, the less risk you carry to the company that you're applying to. So in terms of health and life insurance, you're going to be younger and healthier and less likely to get injured or die. So you're going to lock yourself into those lower rates, and then you're just going to save more money in the long run by locking into those lower rates. So now that we know a little bit about insurance, how much should you get? Well, the goal of insurance is generally to be bulletproof from everyday life. So what that means to you, you might need the consultation of a professional financial advisor, but that's the goal of it. So now we're going to go over a quick little example to show you the importance of insurance. So here I'm going to go over a car crash example. So say you're driving down the highway, you get to an intersection and you get distracted for some reason and two cars get totaled. You veer off into a stoplight's broken, and a couple people get injured. So this is kind of an extreme case that we're looking at here for a car crash, but I'm sure you've seen stuff like this on the road. So it definitely happens. So in our example, our total car damage is going to be $30,000 for one car and $50,000 for the other. Let's just say one of them's an SUV and one of them's a sports car. And then medical expenses, the person driving the sports car, let's say somebody has $100,000 worth of harm and another person has $30,000. So that comes down to $130,000 of medical expenses. And then paying for the stoplight, let's say approximately $10,000. I'm not sure what stoplights go for these days. And for pain and suffering, they're going to sue you for a total of $400,000. So all in all, you're down $620,000 from this 5-second mistake on the road. And in our coverage, the example that I took was the minimum insurance that Wisconsin requires for you to own a car. And that is $10,000 worth of property damage and $50,000 of bodily harm. So that only comes down to $60,000 of insurance. And now you have to come up with $540,000 worth of money to pay for this mistake. And I don't know about you, but I don't have $540,000 worth of spare change. And that's why it's very important not to be underinsured. So now that I hope you have an understanding of why it's important to have an adequate amount of insurance, where would you go and get some? Well, if you look online, the first thing you're going to notice is that there are many, many willing companies that would want to take on a new customer. So you got to pick and choose pretty wisely. So how do you do that? You can't always trust online reviews because insurance is regional. So the rates that are here in Wisconsin aren't the rates you're going to find in California. And some companies might cover certain things in Wisconsin that you wouldn't ever encounter in California, like snowy roads or something like that. So you really got to pay attention to where these reviews are coming from. So you can also fill out like preliminary forms for specific insurance companies, and they'll give you a rate before you actually like lock into a policy. So you could fill out their applications, and then they're going to run the numbers and let you know what it comes down to. So you could do it manually like that. But there's also what I would recommend, independent non-commission agencies. So what that means is that they're not getting any money for selling a certain insurance to you. So they don't really have any incentive to have bias to sell you a product that you don't need. And that's really the only way you can get a good input of what insurance would be best for you. So also when you're shopping around for insurance, it's important to keep in mind that cheaper isn't always better, because it's usually cheaper for a reason. Taking that 15 minutes to save 15% might end up just like cutting a bunch of really important stuff from what you're covered. And then if you do end up having to end up getting in like a car crash or something and needing that insurance, you might have lost it because you took a cheaper insurance. So it's important to look at what is being covered in your insurance plans. So I hope that was a good general overview of insurance. We're going to be going more into detail in life and health insurance in a later video, so stay tuned for that.